All right, I wanted to let everyone know that this is intended as a primer on de-risking. Those of you who are fully immersed in the problem set here may find some of this information fairly basic, but I hope, especially towards the end of the presentation, there will be some nuggets of good information for you. I also wanted to let everyone know that there's a good chunk of this that is US focused. There are two reasons for that. One is a lion's share of our work around de-risking does take place in the US. The second reason is that the US laws and policies, particularly around sanctions and counterterrorism, have an outsized impact on financial access for NGOs globally. With the long arm of US sanctions and some of the other policies, it would also be hard, given the current global financial marketplace, to isolate US banks within this problem set. So I'm going to go ahead and share my slides. Oh, the other thing I wanted to let you all know before we get started is that we have guests online today that are not from the NGO sector. Crown Agents Bank, who some of you may be familiar with, is in listen-only mode today. We are planning a part 2 of this de-risking series, hopefully taking place in October, that will feature Crown Agents Bank. And we thought it would be a good idea for them to listen in and hear some of your concerns so that they can prepare the most relevant session for you all. The other piece of this is keep an eye out for an email from me later this week that will have some questions for you all regarding your current financial access challenges, specifically around which country context you're finding most challenging. That information will be anonymized, but will be funneled back to Crown Agents Bank for preparation in this upcoming session. So do respond to that email as soon as you get it so we can get those plans underway. Thanks a bunch, and I'm going to start the slideshow. All right, terrific. As I mentioned, this is a primer on financial access, but if you hold on till the end, I think there'll be some good information for everyone. For those of you who do not know me, I am the senior manager of the Together Project at Interaction. I've been working on de-risking and related issues around sanctions, counterterrorism, licensing, etc., since 2015, and hope to bring some of that expertise to bear on this session today. So what is bank de-risking? Defined in the Anti-Money Laundering Act of 2020, this is a bit of a long one, but I'm going to read through it quickly. Actions taken by a financial institution to terminate, fail to initiate, or restrict a business relationship with a customer or a category of customers, rather than manage the risk associated with that relationship, consistent with a risk-based approach. Due to drivers such as profitability, reputational risk, lower risk appetites of banks, regulatory burdens, or unclear expectations and sanctions regimes. So what does this look like in practice? Bank de-risking can manifest as account closures or account refusals, significantly delayed or canceled international funds transfers, and unusual requests for significant additional documentation. Also noting that in most of these cases, the NGOs receive little or no explanation as to why a bank is taking these actions. Sanctions, counterterrorism laws, and material support prohibitions across a multitude of jurisdictions are primary drivers of de-risking. In short, de-risking is the act of a financial institution shedding rather than managing any perceived risk of money laundering or terrorist financing, in line with the risk-based approach. And although banks may de-risk NGOs, NGOs typically do not de-risk their program participants, so they find other ways to move money, including money transfer businesses, hawalas, which can be very expensive, cash carry, which can be very dangerous, international transfer mechanisms through the UN, which is not available to all NGOs, and mobile options. Some of the options here may be too costly or not built into budgets or program agreements. Back in 2017, the first empirical study of the problem of financial access for US nonprofits that were working abroad was undertaken. It remains the only empirical data on the subject to this date. And although it is almost 7 years old, the data contained in this report is extremely relevant today. As the researchers engaged in this project, they knew that derisking was a significant problem. What they did not expect to find was that fully 2/3 of US-based nonprofits working abroad were facing some sort of financial access difficulty. As you can see here, the problem in 2017 is also the problem today. Transfers delayed. 36.7% reflected back 6 years ago. And what we hear from our partners and members is that that is still the significant financial access challenge facing NGOs. As you can see at the top of this graph, accounts closed and refusal to open accounts at 6.3 and 9.5% respectively seem like a very small share of the problem. However, that can have a huge impact on NGO operations when they receive a letter from their bank saying you have 30 days to move your money with no explanation given. Resources and personnel sometimes have to be pulled over from other projects so that the NGO can scramble to find a new bank to carry their accounts. Another puzzling thing from the 2017 survey is that the destinations of delayed wire transfers is pretty evenly distributed around the globe. The researchers went into this expecting to see a huge cluster around the MENA region. However, that was not the case, at least then. One of the possible explanations for this is the breakdown in the correspondent banking system. Every year that goes by, we see fewer and fewer banks willing to play the role of correspondent banks. And so that can be impacting transfers globally. Just wanted to mention there have been several additional not quantitative, but qualitative studies on derisking that have mirrored the results found in the 2017 study. This includes the Women Peacemakers program, jointly produced with Duke Law School here in the US, called Tightening the Purse Strings. That looked at the recipient end of many of these transactions. In addition, the US's General Accountability Office, they changed their name a couple of years ago, did studies on derisking around charities in 2018 and 2021. The Overseas Development Institute in the UK worked with the London School of Economics on a series of papers. The one on Syria is the most robust. If you want to take a look at that from 2018. There's also the Yale Capstone study that was supervised by our colleague and friend Sue Eckert and many others, but we do have the links here for you, and you'll get a copy of these slides after the presentation. So what are the impacts? When program funds cannot reach their destination in a timely manner, life-saving work must be delayed or canceled in the absence of another method of moving the money. This can impact trust with communities and authorities with whom NGOs must negotiate to get access to populations in need, and at times it can take years to gain or regain this trust. As noted in the 2017 report, when programs are delayed or canceled because of the inability to transfer funds, peace is not brokered, children are not schooled, staff is not paid, hospitals lose power, the needs of refugees are not met, and in the worst cases, people die. I think most of you, as sitting in the NGO seat, are very familiar with the due diligence and risk mitigation processes that are undertaken by NGOs, most of which exceeds what is required by law in any given country. But just to quickly go over for some of you, and I just wanted to emphasize, we as the NGO sector need to do a much better job of educating both regulators and financial institutions on the measures that we're undertaking to provide greater comfort around some of this work. But the internal controls can include just a sampling here: preventing diversion, staff training, whistleblowing mechanisms, multi-step verification processes, and segregation of duties. There's due diligence on both employees, partners, and suppliers. And these processes are taking place both in country and with headquarters staff. It's also important to keep the message out there that NGOs are not uniformly high risk. Financial institutions and government should understand and recognize this point. The Treasury Department in the US has come to this place within the past couple of years. and in their 2022 National Terrorist Financing Risk Assessment, stated not all tax-exempt charitable organizations present the same level of terrorist financing risk. And the vast majority of US-based tax-exempt charitable organizations face little or no risk of being abused for terrorist financing. So let's talk just a little bit about what is happening globally to mitigate this problem. Most of you may be familiar with UN Security Council Resolution 2664, which was passed in December of last year. This was a monumental step by the UN. It was championed by the US government and the government of Ireland. And what this resolution does is create a humanitarian carve-out in all existing and future UN sanctions regimes. There are reporting requirements, and the emergency relief coordinator must brief the UN sanctions committees on the progress of implementing this. The US joins a very small club of nations that have implemented this resolution so far. So the proof will be in the pudding to see how other nations implement this resolution at the state level. There are also efforts underway at the Financial Action Task Force. For those of you who are unfamiliar with FATF, it has been called the most important agency you've never heard of. It is an international standard-setting body that sets recommendations for countries to implement their own standards, laws, and regulations around money laundering and terrorist financing. Recommendation 8 on nonprofits is the recommendation under the FATF scheme that is most relevant to us. It was updated in 2016. That was the first time it had been updated since it was implemented. That update was significant because it took the language out of the standard that said NGOs were particularly vulnerable to terrorist abuse. The FATF has realized 5 years later that wasn't sufficient to mitigate these problems. And so in February of 2021, they undertook a work stream on unintended consequences, looking at derisking, financial exclusion, and the undue targeting of nonprofits. The first phase of this work was a stock take to consolidate previous analysis and research, to talk to other stakeholders, including expert bodies, to identify and understand the problem. In June of this year, the FATF plenary agreed to consider amending Recommendation 8, the interpretive note for that recommendation, as well as its best practices paper, which is a guidance document on the recommendation. It has solicited input from a variety of stakeholders, which it's now considering, and it will formally take up this feedback during its October plenary. So keep your eye out this fall, hopefully for some very positive changes around Recommendation 8. There are multi-stakeholder dialogues happening around the world. These are venues where NGOs, financial institutions, and regulators come together to assess the problem nationally and come up with some creative solutions to mitigate what's going on in their particular countries. According to the FATF, there are dialogues currently going on in at least 16 countries, including the United States, the UK, Netherlands, Germany, and other places. Some of the work that happens in these dialogues includes sharing knowledge, practical guidance to financial institutions that incorporates knowledge and information on the composition and characteristic of the NGO sector, as well as practical information for NGOs on the obligations, regulatory and otherwise, on financial institutions. There have been studies and research reports coming out of these dialogues, and they have facilitated NGO participation in national risk assessments. Probably the most important is that they've facilitated an ongoing dialogue, which has proved to be very productive. Let's look a little bit at the US and what is happening here. As I mentioned at the outset of this presentation, the US sanctions and counterterrorism policies really do have an outsized impact on what is happening in the global financial access problem set. Over the past 3 years, you've probably heard NGOs in the US remark that the US government has shifted from being a stumbling block to being an active collaborator in finding solutions. For example, just last month, U.S. Treasury hosted a learning session with financial institutions in which they reiterated information and existing guidance that financial institutions can process transactions in support of NGO activity and may rely on the statements of their customers that such transactions are authorized unless the bank knows or has reason to know that the transaction is not authorized. For example, that the intended recipient is a listed or sanctioned entity. Treasury has expressed a willingness to talk to financial institutions that are not processing transfers for Syria, those transfers that may in fact be authorized on behalf of the NGOs that are having difficulties with their banks. The AML Act of 2020, which I mentioned at the outset of this program, was the most sweeping update to the U.S. Bank Secrecy Act since the Patriot Act was passed in the early post 9/11 era. There is some very valuable sense of Congress language in that act that stresses providing vital humanitarian and development assistance and protecting the integrity of the financial system are complementary goals. Anti-money laundering, countering the finance of terrorism, and sanctions policies must ensure that they do not unduly hinder or delay legitimate access to the international financial system for underserved individuals, entities, and certain geographic areas. Most importantly, this language in the Act states that incidental, inadvertent benefits that may indirectly benefit a designated group in the course of delivering life-saving aid to civilian populations are not the primary focus of U.S. government efforts. The Act requires a number of things that have already been completed, some of which U.S. Treasury is still working on. This includes a review of U.S. regulations to identify those that are not in line with the risk-based approach and to propose changes in accordance with that. It required a new Government Accountability Office analysis of derisking. This was completed in late 2021. It also required Treasury to create and publish a derisking strategy. This was published in April of this year, and we'll talk about that in just a bit. The law also required bank examiners. Those are the regulators that go out and audit or examine individual banks here in the U.S. The law requires them now to attend annual training, which should include training on derisking. Some other steps that the U.S. government has taken included updating the FFIEC Bank Examination Manual. This is the guidebook that examiners or regulators use when they go in to examine or audit individual banks here in the U.S. It has been referred to as the Bible of bank examinations. And although the intended audience is bank examiners, individual financial institutions do refer to it as sort of their own roadmap to know what the bank examiners will be expected to do. It now states that examiners are reminded that no specific customer type automatically presents a higher risk of money laundering, terrorist financing, or other illicit financial activity. Further, banks that operate in compliance with applicable BSA AML regulatory requirements and reasonably manage and mitigate risks related to the unique characteristics of customer relationships are neither prohibited nor discouraged from providing banking services to charities. As I mentioned, the AML Act required another GAO study on bank derisking. This was completed also in late 2021. In that, the researchers learned from bank representatives that they will limit or deny services to nonprofits, largely because of their efforts to comply with AML and BSA regulations. So again, confirming what we suspected all along, the sanctions and counterterrorism laws and policies do contribute and are a major driver of de-risking. Bank representatives also cited the heightened scrutiny they receive from regulators when they bank higher risk money transmitters and nonprofits, and that there is still uncertainty about the regulatory expectations on them around conducting due diligence. In 2022, U.S. Treasury updated its national strategy for countering terrorist and other illicit financing. There's some very positive language in there. This is the first time the U.S. Treasury not only acknowledged that de-risking itself was a risk, but specifically called out banks that are de-risking and said that, you know, the irony here is that it undermines the very AML and CFT goals that Treasury is setting out to do. Many of you may be aware of the OFAC baseline general licenses that were issued in December of last year. This was the US government being the first country in the world to implement UN Security Council Resolution 2664. There are a group of licenses for NGOs that authorize humanitarian aid, democracy building, education, non-commercial development, environmental protection, DDR, and peace building. These licenses also authorize fund transfers for the payment of taxes, fees, or import duties, or the purchase of receipt of permits, licenses, or public utility services. So again, this is just Treasury's growing understanding that there are certain transactions that need to be taken in country to access populations in need, and it has to be done with whoever the governing authority has to be, even if they are a sanctioned or designated entity. There are NGO licenses now, these new ones, in 29 sanctions and counterterrorism contexts. So there is now a humanitarian carve-out at the minimum, either pre-existing, updated, or with these new licenses. As I mentioned earlier, in April of this year, Treasury issued its new derisking strategy. Interesting that they noted that financial access has actually worsened over the past year due to an increase in sanctions combined with growing humanitarian crises. This is despite unprecedented authorizations from Treasury's Office of Foreign Assets Control. That is the agency in the US that issues those licenses. Unfortunately, the strategy does emphasize profitability as a main driver of de-risking. However, within the context of this report, they do note that profitability includes compliance. They also note that there's a lack of transparency in some jurisdictions that are recipients of NGO funds due to weak AML and CFT laws. And they cite that as a factor as well. Some of the recommendations in that strategy include a revision of the regulations, which was already mandated by the AML Act. Interestingly, they have kind of really gone out on a limb here and recommended that there be regional consolidation of respondent banks in order to address the decline in correspondent banking. So there are places where it's just not profitable for correspondent banks to operate. And the idea is if they can consolidate all of the transfers into a single bank, that would increase the profitability and the likelihood that perhaps a correspondent bank would step forward in those regions. They also would like to address consistent implementation of examination of financial institutions and address that disconnect that we have observed for a while between the really progressive policy statements that Treasury is making about the need to adhere to a risk-based approach and what is happening at the ground level with bank examiners that those policy statements don't always translate to the bank examiner level. We talked about a little bit earlier, multi-stakeholder dialogues around the US. We are getting ready to enter the third iteration of such a dialogue here in the US. The first iteration happened in 2017. It was convened by the World Bank and the Association of Certified Anti-Money Laundering Specialists. That lasted for about a year and a half, and there were some modest developments that came out of that. In 2021, one of the largest think tanks here in the US, the Center for Strategic and International Studies, decided to take on the second iteration of this dialogue. That also went on for a year and a half, and the report with recommendations is linked here. You'll have, again, these slides afterward. Some of the recommendations in the report we've already seen with the de-risking strategy, with the new baseline general licenses that came out in December, but additional recommendations that we'll be looking at as this dialogue undertakes the next iteration, which is slated to begin next month here in the US. Those include issuing guidance that nonprofits that receive funding from the US government have already met the due diligence requirements that the banks need to undertake. So in other words, there's no need for banks to undertake the significant vetting that has already taken place by USAID or the State Department for those NGOs that are implementing partners. There's also a recommendation to create incentives for banks to bank nonprofits, to pilot a safe harbor program for banks with rigorous compliance systems, and to promote risk-sharing measures. We'd also like to see the U.S. government develop safe payment channels for humanitarian transfers to high-risk jurisdictions and explore alternative measures for situations that banks are hesitant to serve. So what are some of the things that NGOs can do to help alleviate this problem, regardless of where they are in the world? The first is to understand what banks are under in terms of compliance requirements. Banks must obtain information about the nature and prospective use of NGO accounts and services. They also must conduct an AML-CFT risk assessment of each account holder, the anticipated use of the account, and the prospective transactions. Then the bank must monitor transactions and account activity for unusual or suspicious transactions. And they must file, at least in the US, they must file SARs, suspicious activity reports. There are some concrete steps that NGOs can take to enhance the relationship with the bank and help provide comfort around some of these transactions. The first is to designate a single person within the NGO to be the point of contact for the bank. The next is to push banks to establish a more formalized relationship with you, including asking them to offer a consistent point of contact. In a lot of cases, that service is only provided to high net value clients, but I think that all NGOs need to ask for this. Do ask for periodic meetings with the bank account manager. Continue to update them on the NGO activities, any changes in programming, new funds transfers that you're anticipating. Importantly, because disinformation is on the rise globally, if you believe that any of your key personnel have been falsely accused of financial crimes or have been confused with someone listed in a terrorist database, proactively let the bank know about this before the bank uncovers this situation on their own. You should also provide the bank with any documentation necessary to prove your case. Oh, I need to go back. You should also let the bank know about the history, size, and location of your organization, the names and addresses of your trustees and board members, the nature of your purpose and activities, as well as the projected use of that bank account and any transaction activity. You should summarize your due diligence for the bank. Again, this is something that we need to do a better job when we communicate with financial institutions. Let them know how you meet and even exceed legal and regulatory requirements. Summarize for them your internal controls and explain how you comply with relevant law. In other words, communicate, and then communicate some more. When sending wire transfers, let the banks know in advance of the nature and the amount and the destination of the funds transfer. Send all of the accompanying information to the bank up front. Do not wait until there's a problem with the transfer before sending additional relevant information. For large transfers or those out of your usual pattern of activity, you need to let the bank know ahead of time what's going on. Also ask the bank if there will be additional documentation or information that they might need in order to process that funds transfer. Provide enough detail upfront about the transfer recipient to allow the bank to eliminate a false positive hit if a name comes up in its automated screening processes. For example, for individuals, give the bank a birth date and address for the recipient. If the recipient's an organization, let the NGO know the registration information, address, or other information that can quickly distinguish that recipient. So that is the end of the presentation. We've got some additional resources here that you can take a peek at if you're interested in doing a deeper dive, and I've provided my email address in case you have follow-up questions.